If I was to start investing, I would take the properties that I currently own. I would cash out if they're investment properties, because there's a lot of investors that have properties that they rent right now that either family are in or that they inherited and it's sitting empty and they're considering doing this, right? I would do a cash out refi on those properties, gather me a lump sum of money. I do those repairs. I get those properties rented, and I would try to save as much of that cash. So once I start receiving rent payments, that I can move on to the next deal.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today we're joined by Duane Johnson, loan officer, speaker, and relationship builder with Equity Capital Mortgage Group. Duane specializes in both residential and commercial mortgages, helping clients navigate financing across a wide range of deals, from primary homes to investment properties and commercial assets. With a strong focus on relationships and long-term strategy, he works with borrowers to structure smart financing solutions that support both growth and scalability. Welcome to the show, Duane.
Hey, welcome. That you're having me, Dylan.
Absolutely. It's great to have you on here. And we were talking in the green room about, the scope of your business. And I was saying to you, it's great that you're able to help folks in a wide variety of deals, right?
Yeah, I am. I do have the ability to help individuals that are home buyers. Also, I have the ability to help investors, especially those that are looking to leverage their portfolios to scale up to the next level, right? Be it commercial or multifamily.
What are the biggest differences as far as being a loan officer and originating those loans between the residential space and commercial financing that most people just wouldn't understand?
I would say that investors are looking more towards tax consequences or no tax consequences. They're also looking at ease of access. They are also looking at products that uh, look at different ways to prove capacity to pay.
Now, when folks are looking at going from residential, real estate, let's say they're flipping or they're doing some type of year-to-year lease, and now they're thinking, okay, I want to get into the commercial space. That
Mhm.
seems like sometimes a natural transition, but it's two different worlds, right? Do you think that, investors who are real successful in the single family space may sometimes have difficulty in the commercial space?
Oh yeah, definitely. I mean, really, we all do, right? When we change our spaces, and but one thing is constant all the time, and that is change. So it's just really learning a new playbook for the most part, or being able to use your actual experience and seeing how it does correlate and roll over, and then taking a look and seeing what things I need to change or that the company needs to change or my approach needs to adapt.
question, kind of getting on a granular level here about the commercial space. I've spoken with so many people who will do value add rehab.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
In the commercial space, I'm not familiar with how that process looks. I'm familiar with hard money in the single family space when folks are doing like a fix and flip, for example. But when you're doing a sizable rehab on a commercial property, are there hard money players in that space? Is there some type of commercial rehab loan? How are people accessing that capital?
Yeah, there are commercial rehab loans that are hard money in the commercial space. Um, However, the qualifications are a lot different. You're going to be looking more as like your personal financial statement, your business numbers, all of those sorts of things in the commercial space. Now, I do have a lot of some access to lenders that will still technically do a DSCR for a commercial space, but it is usually for smaller pieces of commercial property, usually things like warehouses and the such.
Now, when folks are looking at commercial loans, from what I understand, uh, this was the trend at least a couple of years ago, and you could tell me if this is still happening today. Most people were looking at variable rate debt, and I think that bit a lot of people, because what ended up happening was, rates doubled. There was a lot of multifamily development, especially in the Sun Belt, and then you had materials go up, vacancies go up as well. It was kind of this perfect storm. Is variable rate debt still the norm, and is that kind of what's been the status quo in commercial lending?
Well, it has, and I mean, really, because it eases your access, right? Your port of entry with a variable rate, usually because it's going to give you a lower payment and a lot of other things. But if you meet certain criteria as that loan is moving along, then I think that it works, right? Um, are there such things as fixed rates and stuff like that? With commercial, you don't really see it that often, but it does exist. It just is the client there and does it make sense for the client for it to be fixed over a period of time.
Now, I think when folks are looking at commercial financing, they may feel like this is a totally different, and it is, a totally different animal than financing a single family home. If someone is a single family investor and they're typically, doing some type of burst strategy, or they may be getting a hard money loan, or they may be getting a, rehab loan, and they're looking at now maybe 6 months, 12 months, 18 months from now, getting into some type of smaller commercial deal, whether it's small multifamily or maybe a small warehouse or self storage, something along those lines. What should they be focusing on as far as to prove their viability for a commercial loan?
Yeah, one would be where they're going to plan on purchasing that commercial property, because there's so many different things that you could use, especially if you had an established portfolio currently. If they're all within a opportunity zone, you could actually sell those 1031 exchange those funds over to lower that amount of down payment that you have to come up with. If you know other investors that are willing to part with you, they could do the same exact thing. And now we have tax-free down payment money to get the deal started. That's one thing that you could look at. I would say having the best credit score as possible. Anything over a 720, I'd be willing to look at in the commercial space. Um, what else? All of the other typical things, like no mortgage late,
Hmm.
no liens on properties, back taxes all paid, uh, those sorts of things.
So if someone has like a HELOC on their property because, they're wanting that access to equity and they're still paying on that, would that be something that could potentially be detrimental to a commercial loan?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yes, it could.
Okay. I guess good for investors to know. I know that those are major vehicles for
That's
folks to
exactly good.
get the ball rolling.
Yeah, because the commercial lender, when they're figuring out capacity to pay, they're taking into consideration your global cash flow in most cases. So they're looking at everything that's going out and everything that's coming in. So yeah, it could play a part because they know that you could extend that credit to the max.
Now, when we talk about being a relationship focused lender, I think a lot of times, especially right now, people are looking more and more for like, hey, how can I kind of get some type of instant approval? How can I do this without interacting with people? I certainly see that as a realtor. But
Mhm.
in lending, and I've said this on other podcasts, lending, I feel like is where the deals start and stop. As a realtor, pretty much, unless someone has a pre-approval, I can't help them, right? And I'm
Right.
sure it's the same thing in the commercial space. How much do you see the industry, trending towards, you know, human touch and a relationship focused business versus trending towards the opposite of that, some type of AI machine auto approval?
Oh wow, Diller. Um, I think I think both will always exist. I think that all of the AI tools and what have you um, will be virtually the same, right? They'll provide the same conveniences that you mentioned or what have you. Um, they'll maybe have a different or unique created personality and voice and things of that sort, or vernacular. Um, but when it comes to an actual face to face, each and every loan officer is different, and each and every loan officer isn't created the same, right?
No
Uh,
question.
yeah, so a lot of investors that I work with personally, um, they have a story, like we all do, and uh, once I understand that story, I'm able to act appropriate, like their goals are just like mine. So when building out and structuring deals one after the other, I have some investors, what we do 10, 12 deals in, a half a year or 3/4, right? And it's their plan. So um, I don't think AI has the ability um, to figure out the easiest way for you to get to a goal, right? But does that interaction make the borrower or the investor own that goal and say, "Yeah, I'm gonna act now."
To your
Yeah.
point, Dwayne, I think there's a lot of kind of spheres of influence that people are operating in within the real estate space. And it's almost like, hey, if someone has a good lender, it's because it's a close friend or a family member. I almost feel like we need more lenders because before I got into the real estate space and when I was trying to buy a home, I remember personally getting turned down. And actually, I was probably not that bad of a situation, had decent credit, had job history. I just had never purchased a home before. And so I think maybe had I gone to a different lender, it would have been a different outcome for me at that time.
Yeah, for sure, for sure. And in the brokerage space, I have the ability to work with 100 different lenders, Dylan. So if it's time for you to buy the house and we look at the paperwork and we decide together, hey, it's time for Dylan to buy this house. One lender may not do what another lender will. All lenders aren't created equal either. They all have add-ons for first-time home buyers. FHA, they have add-ons and different terms and conditions for investors. I have some investors, I'm working on a deal right now and I have to switch it last minute to another lender due to something that came up on the title.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Is that a single family home deal? Is that a commercial deal?
That's a single family home deal.
Okay. Okay. I've seen these
But I
deals fall apart, at
yeah,
the 1 yard line for all sorts of reasons,
yeah,
especially before I was a realtor and wholesaling. That's where I cut my teeth in the real estate space, distressed properties, right?
mhm,
I mean, we would just see things, I have so many stories from a lender needing an additional inspection to someone saying at the last minute, oh, I've actually got this partner over here that needs to approve the deal to, the title company not understanding the logistics of the deal.
right.
People have to really understand that there's so many moving pieces here, especially in trickier deals, especially in distressed. I'm sure you've
And
seen all
and
types.
how well will AI be able to teach the investor all of that?
Right. Not
And
well at all.
how and the investor, how, bought in will they be to AI teaching them versus them already knowing and trying to express that to AI, correct?
What's a deal you've seen fall apart at the 1 or 5 yard line that could have been avoided?
Oh, that could have been avoided. Forgetting that promised your wife that you were taking her on a cruise and you already bought the cruise and plane tickets. And we are about to close now, and you dip into your down payment money.
Ugh.
And now we have to, if you were to put another deposit in, it has to be sourced and all of that sort of thing.
Man, that'll do it. That'll do it. Don't promise something at a future date if you're not sure if you're going to be closing on a home, right? I think there's so many. I've heard instances of people buying like a sofa on credit and that getting them into some type of situation where now they have debt that the lender doesn't like.
Yeah,
For
so even like first time home buyers and first time investors, they're apprehensive, and when I get to talking with them, they are real kind of shy and don't want to mess up or say something wrong to me or what have you. And I just ask them, I can show you all of this and we'll walk through it all, but are you organized?
yeah,
That's what I need out of every client. If every client was organized, um, we'd be in great business. And I could actually help probably the 10% that do fall out. Dylan, my organization, we're closing out these loans at a 90% clip. We
wow.
actually know what we're doing. We know what DSCR is. Um, and we know what private lending and we know what hard money is and we know what investors are looking to accomplish.
What's the biggest difference in DSCR in the commercial space between the residential space? Is it a similar process?
Similar process. Yes. Similar
It's just that
process.
scale. Okay.
Yeah. Yeah. Similar process. You can use rental income as capacity to pay as well. But the owner doesn't want to be part owner of one of those entities that's renting the commercial space in most cases.
Now, for folks who are looking at getting into investing, right, and they're trying to determine where they're going to source their capital, are they going to go hard money? Are they going to go a rehab loan? Are they going to pool money between friends and pay cash, right? From your perspective as a lender, if you had to start right now investing, what would be your source of capital?
If I was to start investing, I would take the properties that I currently own. I would cash out if they're investment properties, because there's a lot of investors that have properties that they rent right now that either family are in or that they inherited and it's sitting empty and they're considering doing this, right? I would do a cash out refi on those properties, gather me a lump sum of money. I do those repairs. I get those properties rented, and I would try to save as much of that cash. So once I start receiving rent payments, that I can move on to the next deal.
We are coming up on time here, Duane. Any new projects that you're working on? And then as well, what's the best way for folks to get in contact with you?
Yes. Uh, Duane Johnson, Equity Capital Mortgage Group, 216-513-6392. My email is djohnson at equitycmg.com. I am also on Instagram as Isn't His Name Paco, and I am on Facebook as D Johnson. LinkedIn is Duane D. Johnson, MBA. I look forward to speak with everybody. Something that I've got working on new right now is we do have a lot of new construction going on in Cleveland, Ohio. So we are working on one-time close currently.
Duane, thank you so much for taking the time today. Thanks for joining us.
You got it, Dylan. Pleasure.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.